Okay, good morning, folks, and welcome to Swing Trading Today. The topic of our conversation today, excuse me, I'm sorry, is going to be the metals. But before I do that, I want to share with you some information that was pushed to me by one of our fellow members, Don. And I had heard about this, and I checked the other day on Direxion's website. And I'm going to copy this link in the chat box so that everybody can have it. That Direxion is taking several of their funds, which are currently leveraged 300 times the current move of their underlying index or whatever they're benchmarked to, and they're going to 200 times. So from 3x to 2x. And they're citing unprecedented volatility. And that will affect the gold miners, the DUST, that's the inverse of the NUGT, inverse meaning bear, the juniors as well. So, and they're closing. Gasol, that makes sense. That went bust. And the other ones I really don't follow all too much. Regional banks. That's the Bear ETF. I don't see DPST on here, which is the long ETF of the regional banks. So they're just closing the Bear ETF. All right, interesting. So here's that link so you have it. All right, let's get to the topic du jour. I've been hearing a lot about this of late, that there's a shortage of physical gold and physical silver. But I titled this Silver New Highs because silver has been under such a tremendous amount of pressure. It's an industrial metal by and large. But you have silver maple leafs, a lot of collectibles out there, and you can't get them. There's just a shortage of silver along with gold. So this is a headline off of Zero Hedge. It's selling like toilet paper. If you haven't bought physical gold yet, it's probably too late. The same holds true for silver. I was watching an interview with the CEO of Majestic Mines. It's a silver miner, one of the bigger players on Kitco, and he was saying how 25% of the miners of silver are offline due to the cerveza sickness. Hey, Sam, good morning. I heard news that there's a little bit of good news out of Italy that you're seeing a topping out of new cases. Is that fact? Hopefully that is fact. So the news ultimately caught up with the price action of late. And I'll go to those charts in a moment, but I mentioned this last week, and we were buying silver really at the depths last week. We did two separate purchases. I thought I had this up here. There we go. And I mentioned that this is a chart of the gold-silver ratio. And when you go back to 1997, mid-1997, when this is, I'm sure it goes back further, but this is as far back as the chart goes, you can see that we are at highs on the gold-silver ratio. Basically what this is the number of silver ounces it requires for you to purchase 1 ounce of gold. And you can see that we are at unprecedented historical highs in that ratio. And we were buying at around 122. It even went higher than that. Now we're back down to 114. And historically, we're still well beyond the average So it looks like we still have some upside potential here on both of these metals. Hey, Kat, how'd you make out with the Apple trade yesterday? I was thinking about you. Good to hear, Sam. All right, so gold and silver obviously ripping now. I don't think it's too late, but obviously the low-hanging fruit has been picked. Good morning, RL. All right, economic data, then we'll go to the charts. We should start seeing, in earnest, some data getting released that will highlight the damage that's been done by the virus. And we have the PMI, market manufacturing PMI and services PMI for March being released today. And the services index was already in contraction last month, with the manufacturing sector just barely holding on to the expansion level above 50. Any number below 50 is contraction. Any reading above 50 is expansion. Durable goods for February. That may not give us a really good read about the virus, the impact of the virus, but the PMI today should give us a real good clue. And I don't expect for it to be pretty. All right, let's get to the charts. Jerry, good morning. All right, so kicking off with silver. This is a 4-hour chart. These will all be 4-hour charts. We are up another 5.5% on the day today on silver spot. We did pull back overnight. Bullish key reversal bar, a beautiful reversal bar. It looks as though we're getting poised to break out yet again out of this triangle formation. Very, very nice. As for gold, screaming higher. It looks like it's outperforming silver, but it's not on a percentage basis. On a percentage basis, it's up. I'm going to put this in air quotes, only 3.5% relative to roughly 5.5% for silver. So silver is outperforming gold at current, with that gold-silver ratio coming in a bit. Now, gold VIX is still up very high. If you bring up GVZ, it even increased yesterday while gold was up on the day. So just watch that gold VIX. Any read above 31, it implies that there's still a considerable amount of volatility out there, and just be very, very cautious. We want to see that gold VIX come in a bit. Let's see how the dollar's doing. The dollar was holding its gains yesterday. The failure of the Senate to pass that bill kept a bid under the dollar, but the dollar did overnight break support. That is bullish for commodities. And I mentioned yesterday morning that we were seeing a rally in the ag names: wheat, corn, soybeans, and you saw the commodity ETF yesterday rally as well. So I don't think that we're going straight up higher here, but we are definitely basing on the ag names. And folks, if you take a look at the tips yesterday, I went over this last night with members on Market Wrap. If you take a look at the chips, if you take a look at any other number of metrics out there, there is a signal by the market being flashed that we are seeing pressure on inflation moving forward. So the dollar's pulling back. We need to close out this month and quarter down below the 100 mark, or else we do have a breakout on a monthly and quarterly basis. Let's go to the S&P futures. Now, what we did overnight was we broke out, did a retest, and now we are pushing up higher, up about 4.75%. Folks, I'm not a big lover of bright green futures, so I'm not ready to say we have a bottom here yet. I would love to say that, but maybe we do. But I always worry about these futures fading, and I'll be very cautious about chasing this market up higher. There's plenty of volatility out there. I think what the market is pricing in is a foregone conclusion. I think they vote tomorrow, the Senate, on that bill. A foregone conclusion that the Democrats, not that this is a great bill. Believe me, this is a pox on both their houses for letting this happen yet again, having to bail out all these industries. But the Democrats have lost their collective mind. I think it's even the far left and the right wing are in agreement. Send checks out to the little guy, and I think the moderates want an increase in unemployment insurance. But anyway, I don't want to get into politics. We are breaking out here this morning. Very good-looking chart. Ultimately, folks, we are going to get a pullback. For those that are looking to invest in this market, it may take weeks, it may take months. We are going to pull back and do a retest. Perhaps it'll be a higher low. Me personally, I think that we are breaking. I do not think, by any stretch of the imagination, that we are in the clear yet. Remember that it took 5.5 months after the passage of TARP for the markets to finally bottom out back in 2008. So simply because they passed this legislation does not mean that we have a bottom in this market. It should goose the market, but it does not mean we have a bottom. Sorry to be doom and gloom here. Just trying to be a realist. The Nasdaq, it's been outperforming the S&P 500. That's surprising because you have a lot of regional banks in there as well. And the regional banks have just simply gotten killed. So the Nasdaq looking okay. We need to see a higher high. What I would do is, if you're looking to add more to your position, watch for a rally up and through. This pivot point here. We did put an undercut lower low here. So if you're looking for a pivot point at which to buy this market, I would look for a rally up and through, resistance, or a pullback and a retest yet again of 7,000 on the Nasdaq. But be very, very careful here, folks. Let's take a look at nat gas. Nat gas breaking out yet again on a 4-hour basis. A lot of head fakes here. During the depths of the sell-off, nat gas was actually up on the month. And we were watching it pretty closely, but then it gave up those gains. It is now negative. But it's looking good, so we'll keep an eye on it. See how we're looking on a weekly basis. Yeah, here's that big sell-off last week. Too bad. All right. What else do we have here? Bitcoin. Bitcoin should do well and it is doing well. We're up 425. It should do well. What we're seeing here, folks, I mentioned this last night on Market Wrap, is that what we're seeing is a reflation trade. The Federal Reserve has stoked the ire of inflation. We just don't know it yet. And our past analysis of Bitcoin has shown that as the CPI increases, the consumer price index increases, the correlation with Bitcoin is undeniable. So if you're looking for a correlation, simply overlay Bitcoin and the CPI, and you'll see exactly what I'm talking about. So Bitcoin should do a little bit of catch up here and recoup some of these losses. And as a store of value, I think it's been brought into question, the value of Bitcoin relative to the price of gold. I mean, the sell-off here has been simply dramatic relative to gold. I think that argument's been put to rest. Palladium rallying off its lows. This is an industrial metal. I'm not expecting a lot of upside move here. A lot of damage has been done. The same holds true for platinum. Taking a quick look at the ag names, again, to point out inflationary pressures. Last I looked overnight, they were down. They were pulling back. Where's soybeans? Soybeans are my favorite to keep an eye on. Here we go. They have recovered somewhat. Look at this rip higher. They broke out, consolidating. For those futures traders out there, watch for a continuation breakout on soybeans. So here is our downtrend. We still technically are in a downtrend, but we are seeing a rapid recovery. Wheat, same deal here. Big time move. Higher lows. So watch for higher prices at the supermarket. We did break down below this lower band of support on a 4-hour basis. So these ag names are telling us a story along with gold, silver, the tip market. Here are the tips: Treasury inflation protected securities. Ripping through this. This is a bond, folks. These are bonds. Look at this volatility. It's incredible. All right. I want to circle back. I want to take a look at the not the Nasdaq, S&Ps again. We continue to gain strength here, up over 4.75%. So they're pricing in the passage of this legislation. And what was a tell is if you take a look at the chart after that failed vote yesterday, the S&Ps pulled back, but they didn't sell off. I mean, I was trading when they first failed to pass the Economic Reform Act of 2008, and that was the Republicans that blocked it back then. And the markets completely dropped like a stone. And I was expecting the same yesterday, but it didn't happen. It did weaken up, no doubt about it. But ultimately, overnight, we caught a bid, and here we are this morning. Oh, they're going to vote later today? All right, good info. All right, folks, with that, I'm going to say everybody have a profitable trading day. If you haven't hit that like button, if I can ask you to do so, I'd really appreciate it. And I will talk to you soon. Be well.